From this particular question, we are required to calculate cash inflows from operating activities. Now students, it can be clearly seen that the information given here includes information from balance sheet and from profit and loss account. So it is the indirect method that we are going to follow here. In this question, there are no appropriations. Appropriation means there is no transfer to reserve, there is no dividend that has been paid or proposed, or any other transfer to reserve. Since there are no appropriations, that means the difference of profit and loss account represents profit before tax and extraordinary items. So, profits before tax and extraordinary items. This is equal to difference of these two values. The current year figure is 30,000, the previous year is 20,000. So 30 minus 20 makes it 10,000. So that is current year figure minus previous year figure. Profit before tax and extraordinary item comes to rupees 10,000. Now to this amount we will adjust non-operating and non-cash items. Non-operating and non-cash items. Non-operating activities. Remember students, here we have goodwill. Goodwill in the previous year was worth rupees 20,000 and in this year the value is 16,000. That means we have written off goodwill to the extent of rupees 4,000. So in add column we will write goodwill written off 4,000. Then we have provision for depreciation, which is a non-cash expense. Depreciation is a non-cash expense. In this year, the amount of provision for depreciation is 32,000, whereas in previous year it was 30,000. That means we have created additional provision to the extent of rupees 2,000. So provision for depreciation 2,000. Besides this, there is no other item which can be classified as non-operating or non-cash item. So the total comes to 6,000 for non-operating non-cash item, and this is when added to the profit before tax and extraordinary item, we get a total of 16,000. This 16,000 represents operating profit before tax and changes in working capital. Continuing ahead, the last figure that we had calculated was operating profit before tax and changes in working capital, which was rupees 16,000. To this figure, we will adjust the values of current assets and current liabilities. Rather, we will adjust the change in the values of current assets and current liabilities. So students, coming to changes in working capital. Remember, figures would have to be added or subtracted. So we'll classify them as add and less. Coming to bills receivable students. Bills receivable, the current year figure is 18,000 and the previous year figure was 14,000. That means there is a corresponding increase of 4,000 during this year. Bill receivable is a current asset. Any increase in the value of current assets has to be deducted. It involves outflow of cash. So less increase in bills receivable, which is 4,000. Now students, coming to outstanding rent. Remember, outstanding rent is a current liability. The previous year figure is 1600 and the current year value is 4000. That means there is an increase in the current liability for rupees 2400. So this should be added. Increase in outstanding rent 2400. Now students, coming to prepaid insurance. Prepaid insurance is an asset. The previous year amount was 1400 and the current year value is 1200. That means there is a decrease of rupees 200. Any decrease in the value of current asset should be added. So decrease in prepaid insurance is being added here. Then we have stock. The value of stock in the beginning of the year was 1400 and the closing value is 18,000. Earlier it was 14,000, not 1400. So there is an increase in the value of stock. Remember, stock is a current asset. Any increase in the value of current assets involves outflow of cash, hence should be deducted. Increase in stock, which is 4,000. The figures in bracket includes or shows the amount which have to be deducted. So now students, let us total this out and find out the amount of cash inflow from operating activities. 8,000 would be deducted, that would be 8,000, 10,600. 10,600, and this amount represents cash inflow from operating activities. Remember, in this question there was no adjustment or no information about tax paid during the year. So we have ignored it and we have directly got to the amount of cash inflow from operating activities.